Rocket Lab just sold 5 launches of a rocket that does not exist yet as a flying vehicle. That contract is the largest in the company's history. It pushed the stock to a record high. In 6 weeks, the company Rocket Lab was built to compete with goes public at $1.75 trillion. I've held Rocket Lab since $4. If you are thinking about whether to buy it now or deciding what to do when the SpaceX IPO opens, what I found changes the comparison you need to make. In 2022, Rocket Lab was trading at around $4 a share. The whole company was valued at roughly $2 billion. $2 billion is roughly what Apple earns in total revenue in about 2 days. Most people look at Rocket Lab in 2022 and saw a small rocket company. A company that launched small satellites on a small rocket called Electron. Cheaper than SpaceX, less powerful than SpaceX but smaller. That is not what I saw. Because if you actually read the filings, Rocket Lab was already 2 completely different businesses operating under one name. The first business is the one everyone knows, Electron, a small orbital rocket, roughly 18 meters tall, designed to put small satellites into low Earth orbit. By 2022, it had already flown dozens of times. It worked. Customers trusted it. Today, Electron has completed over 75 successful orbital launches without a single catastrophic failure. The second business was the one the market was pricing at almost nothing. Rocket Lab was building satellites and spacecraft components, not launching them, building them. Flight software, reaction wheels, solar panels, star trackers, entire spacecraft built to customer specification. They called it Space Systems. In 2022, almost nobody was talking about space systems. The story was small rocket company. The valuation was small rocket company. So I bought it. Fast forward to May 7, 2026. Rocket Lab reported Q1 2026 earnings. Revenue $200 million. That was what the company used to earn in roughly 2 full years, now in a single quarter. Up 64% year over year, a company record. Here's what the headline means. Of that $200 million, $136.7 million came from Space Systems. $63.7 million came from launch. The satellite business, the one nobody was pricing in 2022, now generates more than twice the revenue of the launch business. The market was selling me the rocket. The satellite company came free with it. The thing they gave away in 2022 is now the bigger of the 2 businesses. If you are thinking about buying Rocket Lab today, this is what you are actually buying. Not a small rocket company, a space systems and defense contractor that also launches its own rockets. Now I want you to hold something before we go further. In March 2026, Rocket Lab CEO Peter Beck stood in front of cameras and said his rocket's debut would not be defined by what he called, and I'm quoting directly, some rubbish about just clearing the path. He was talking about SpaceX's Starship. His own rocket had not yet left the ground. Hold that, we are coming back to it. There is something most people looking at this stock get wrong. SpaceX is going public at $1.75 trillion. And a lot of investors look at that number, then look at Rocket Lab at $117 a share and think, this is the smarter entry. SpaceX is the expensive one. Rocket Lab is the affordable version before the IPO opens. When I ran the numbers, the logic did not hold. There is a metric called price to sales. The most basic way to measure how expensive a stock is relative to what the company actually earns. Think of it like this. Say I open Daniel's Burger shop. The shop earns $1 million a year in sales. You offer to buy the whole business from me for $85 million. You are paying 85 times annual sales. Price to sales ratio, 85. A typical S&P 500 company trades at roughly 2 to 3 times sales. High-growth tech companies at their peak might reach 15 to 20 times. At 85 times, you are not buying what Rocket Lab earns today. You are buying a bet on what it becomes. As of May 11, 2026, Rocket Lab's closing price is $117 per share. Its market cap is roughly $68 billion. Its annual revenue run rate based on Q1 2026 is about $800 million. Price to sales approximately 85. SpaceX at $1.75 trillion against its 2029 revenue of $18.7 billion is roughly 94 times 6. Both are expensive. Neither is a bargain. But here is something worth saying that most people covering this comparison are not saying. If you watch my Falcon 9 video, you already know that 2025 was Falcon 9's last record year. SpaceX said it publicly. Gwynne Shotwell, who ran SpaceX's operations for over 20 years, said Starship obsoletes Falcon 9 and the Dragon capsule. The rocket that built SpaceX's dominance is being wound down. Links to both that video and my full SpaceX IPO breakdown are in the description. So when you look at SpaceX's $1.75 trillion valuation, you are not really paying for Falcon 9. You are paying for Starlink, which is proven and profitable, and you are paying for Starship, which has not yet generated a single dollar of commercial revenue. Both SpaceX and Rocket Lab are asking you to pay a premium for an unproven rocket. Neutron has not flown. Starship has not commercially operated. The difference is what sits underneath that bet. SpaceX has Starlink as a profitable anchor, $18.7 billion in total revenue, a real business cushioning the speculation. Rocket Lab has $800 million in revenue and no equivalent cushion while Neutron is still on the test stand. SpaceX is the safer bet of the two. That is not the question. The question is whether the price of that safety at $1.75 trillion is worth it compared to the upside you get by taking the riskier position in Rocket Lab at $68 billion. Neither of those is cheap. One of them is a bet on a rocket. The other is a bet on two. If this kind of breakdown is useful, hit like right now. It helps me reach more people before the SpaceX IPO opens. Now, let's go back to what Peter Beck said in March 2026. Some rubbish about just clearing the pad. Here is the full context. When SpaceX tests Starship, its massive next-generation rocket, Elon Musk has consistently defined success in broad terms. After early tests that ended with the vehicle exploding, Elon called them successes because the launch infrastructure survived. His philosophy: fail fast, learn faster, find the failure mode, move on. That approach produced Falcon 9, the most successful orbital rocket ever built. I am not criticizing it. But Peter Beck is a different kind of engineer. He built Electron to work reliably from the start every time. Over 75 successful orbital launches. No catastrophic failures. That record is why defense customers put classified payloads on Electron. You do not put a national security satellite on a rocket you are not certain about. When Beck said his rocket would not be defined by just clearing the pad, he was not only setting a standard, he was selling to every program manager who cannot afford to lose a mission to a learning exercise. And then in April 2026, I read something Beck said about Neutron's engines that I had to go back and check twice. He said the Archimedes engines are currently undergoing what he called nasty tests. Nasty is an engineer's word for something specific, not difficult, deliberately destructive. You put the component past its design limits until it breaks. You find where it fails before a launch finds it for you. Beck said that to investors in public without softening it. That word choice tells you something about who he is. If you are considering Rocket Lab before the SpaceX IPO, the Archimedes engine timeline is the single most important thing on your calendar for the rest of 2026. Now, the question about Neutron that every investor eventually asks: how much does this cost, and is it worth it? Estimates put total Neutron development costs somewhere between $300 to $500 million. Rocket Lab has not published the exact figure. Put that in context. Falcon 9 cost approximately $390 million to develop, partly funded by NASA. New Glenn, Blue Origin's comparable rocket, cost an estimated $2.5 billion and took over a decade to reach its first launch. The Space Launch System has consumed over $23 billion in public money. If Neutron comes in at $500 million, it will be one of the most capital-efficient medium-lift rocket programs in history. At Rocket Lab's listed price of $50 million per Neutron launch, the rocket breaks even in roughly 10 successful flights. Falcon 9 has flown 648 times. 10 flights is not the ceiling, it is the floor. The question is not whether 10 flights to break even is a good deal. The question is whether Neutron reaches orbit. Here is something that changes how you read that risk. On May 7, 2026, a customer Rocket Lab is not permitted to name signed the biggest launch contract in the company's history. 5 Neutron launches, 3 Electron launches, baseline 2026 through 2029. Value undisclosed, but confirmed to surpass the previous record of $190 million. A customer willing to sign a multi-year, record value contract for a rocket that has not flown is almost certainly a government or defense agency. Commercial operators do not book unflown vehicles years in advance at that scale. Government programs do when they have a strategic need for a launch provider that is not SpaceX. Someone with access to more information than you or I have looked at the Neutron program and committed their budget to it. Tell me in the comments, does that confidential customer change how you read the Neutron risk? Or does the unflown status still concern you more? I genuinely want to know. Some of you are already forming the objection. Blue Origin tried this. Virgin Orbit tried. Relativity tried. The list of companies that promised to break SpaceX's grip and failed is long. That reaction is fair. Beck named his mission explicitly. He said 50% of the reason Neutron exists is to break the monopoly in medium launch. He said it in public. Most CEOs in his position would stay diplomatic. He did not. Here's what makes this moment different from every previous challenger. In Q4 2025, government and defense contracts were 35% of Rocket Lab's backlog. In Q1 2026, that number jumped to 49%, a 14% percentage point shift in a single quarter. That does not happen because a company improved its marketing. It happens because the people controlling those budgets made the deliberate decision to route specific missions toward Rocket Lab. SpaceX is the most capable launch provider on Earth, but SpaceX is now inseparable from Elon. Right now, Elon is simultaneously running companies with billions in government contracts and leading a government efficiency initiative that is reconstructing the agencies that award those contracts. I want to be clear, this is not an accusation of wrongdoing. It is a description of a structural dynamic. Some program managers, in certain defense and international contexts, have started asking a question they were not asking 2 years ago. What happens to my program if this relationship becomes a problem? That question is showing up in Rocket Lab's numbers. The $860 million Space Force satellite constellation, the $190 million hypersonic test program, the confidential record contract on May 7, 2026. These are not the customers who could not get on a Falcon 9. These are customers who decided that for this specific mission, they wanted someone else. The monopoly is not only a question of price or capability. It is a question of who you are willing to depend on. Now, here is the part of this story that almost nobody is talking about. A few weeks ago, France's Minister for Foreign Trade, Nicolas Forestier, flew to New Zealand and visited Rocket Lab's headquarters in Auckland. The French ambassador to New Zealand came with him. Rocket Lab's own legal team posted about it. A government trade minister does not fly to the other side of the world to visit a company he does not believe matters strategically to his country. The visit did not come out of nowhere. On April 14, 2026, Rocket Lab completed its acquisition of Mynaric AG, a laser communication company headquartered in Munich, Germany. The deal cost was $155 million, and with it, Rocket Lab formally created Rocket Lab Europe. Mynaric makes optical laser terminals. Think of it like fiber optic cable, but through space instead of underground. Instead of data traveling through a wire on the ground, it travels on a laser beam between satellites in orbit. That technology is not a side purchase for Rocket Lab. It connects directly to the Space Development Agency constellation contracts worth over $1 billion that Rocket Lab is already building satellites for. But the strategic meaning goes beyond one contract. Europe has historically relied on Arianespace and the Ariane rocket for independent access to space. Ariane 6 has faced years of delays and cost overruns. The same question that US defense customers started asking 2 years ago is now being asked in European capitals. If we cannot fully depend on our own rocket, and we are not comfortable depending on a US company that is synonymous with one specific person's political situation, who else is there? Rocket Lab is positioning itself to be that answer. A German acquisition, a French government minister at the door in Auckland, and a backlog that already has satellite constellation work requiring the exact laser terminal hardware Mynaric builds. The government mode Beck has been building in the United States is now being extended across the Atlantic. The contracts now follow a trade minister's visit do not usually announce themselves in a headline. When I found this company at $4, I saw two businesses where the market was pricing one. That thesis worked. The question I cannot answer for you is whether someone watching this at $117 has the same kind of edge I had in 2022, or whether this time the market has already seen what I saw. Here's what I'm personally watching over the next 6 weeks. 1. The Archimedes engine milestone at Wallops Island, Virginia. Beck said to watch for hardware on test stands. When that happens, Neutron is no longer a render. It is a vehicle being integrated for a real flight. 2. The Q2 2026 earnings in August. Adjusted EBITDA losses are guided at 20 to 26 million, larger than Q1's 11.8 million, as Neutron spending accelerates. If losses widen faster than revenue grows, the profitability timeline moves further out. 3. The SpaceX IPO pricing. If it lands below $1.75 trillion, the relative picture between these two companies shifts. If it prices above it, the market is telling you something how it values space right now. On May 7, 2026, a customer whose name cannot be disclosed committed to the biggest launch deal in Rocket Lab's history, 5 missions through 2029, for a vehicle that has never left the ground. The decisions that shaped that contract were made before most people knew this story existed. When the SpaceX IPO lands in 6 weeks and every headline tells you it is the space investment of the decade, ask yourself one question. Are you buying what SpaceX already proved it is, or what Rocket Lab is still in the middle of becoming? If this breakdown was useful, hit like and subscribe. I go 3 layers deep every week.